Hi everyone, this is Dan here, and welcome to today's Facebook Live. I think we haven't really got the word out that we're going to do this, so we don't see a lot of traffic coming in, but that's fine. Just to give you guys, I thought I'll come online, and sorry about the delay because we had a little bit of a technical issue, so we had advanced equipment all set up, and then we decided that, you know what, it takes a while to learn how to use those equipments, and now I guess the phone will work just fine for now. Right, just to give you a little idea about why we decided to do this. You know, over at RunningStream, as many of y'all would know, we've been doing this, helping people with their investments, particularly in the assets, in real estate assets, you know, from residential, commercial, all around the world, to developments, to, you know, some of y'all have been the beneficiary of our portfolio program that has helped you build, you know, quite a bit of, you know, property assets within your investment portfolio. Some of you would have been, you know, come here, talk to us about, you know, all your investment experiences, good and some not so good, and shared experience. I think all the while as a company we try to stay as one that is very close to our customer, very interactive. So you know, those who have used our service will know that you can drop by our office anytime. You'll always be offered a nice barista made cup of coffee, and we just sit down for a chat, and you know, then learn from each other. And if there's service that we can offer you, that's great. If not, you know, you always learn things when you're chatting with people. So that's cool, and we thought we would extend it online, because in reality, when we go out to the real market, we realize, hey, not everybody have the luxury of just spending time, you know, coming here for a couple of hours, and we thought, you know, a lot of you are pretty busy, even on a Friday. It's good that it's a Friday, and we just thought, you know, just over lunchtime, half an hour, it'd be great to get people on board and just let people ask questions. Anything that pertains to investments overseas, investment in assets, investment in real estates, you know, whether there's a new promotion that you see out there, or a market opinion on whether it's Asia, around the world. And in time to come, we thought, you know, when I'm traveling and we're overseas, it'd be great to even show you some of the trips that we make, sites that we visit, projects that we're seeing. So, you know, every Friday, so it's going to work a little like a radio channel, just Friday for half an hour, and we might even get in guest speakers or guest developers or market people to join me, and to talk about their expertise as well, and basically being able to share with you guys as much as possible. So we generally raise everybody's knowledge about real estate, about the global markets, about investments, about a lot of stuff, and that I feel that we can really reach out to you guys. So that's what this Facebook post is about. We, you know, kind of had it last minute, and we sent out a note yesterday to ask whether there's any questions that people want to ask. We didn't get any response from you guys, so you know, no questions. We're going to take it from there. But here's the thing: if there's one advice that I would give to anybody aspiring to buy overseas, is and you know, if there's one important advice, I'm going to tell you, hey, when investing overseas, please do not go with a mindset like Singapore, like as if you're investing in Singapore. One of the common things we see people making a mistake is to look at Singapore market as a reference point. You see, every market is very different. Price points, demographics, the culture, the legal system, and one of the pitfalls, or one of the common things that we see Singaporeans when they go overseas to invest, is that they think that, you know, it's buying a property. It's just like, you know, when you do it in Singapore. In reality, it's not, and it's far more complex sometimes. And I will tell you that unless you do your homework, don't. As a company that does advocate global markets, diversity, you know, in your portfolio, it might be funny that I'm scaring you away, but the reality is that I'm not scaring you away. I'm telling you that you should be more educated, much more educated about the market before you plunge into one, because the world is hardly like us. Remember, Singapore is an exception. Singapore is not norm. All right, Singapore's system, being so small as a country, we can regulate things very very carefully and more closely. And even then, we get our fair shares of scams, and we get our fair shares of investor schemes that are far from desirable. And once you start out this country, you'll find that there are profits, there are opportunities, and heaps of them around, and there are far better countries than us. But the rules are different, the culture is different, and certainly you should not look at them the same when you step out of that. And a lot of research is needed. I mean, one of the reasons when we founded this company, RunningStream, since we're at the topic, is largely because we are not here because we see an opportunity to make heaps of money. But I think we're here, and I like to believe all my staff are here because we see the need. You see, one of the most common thing is that I share. I remember I was at a conference where I spoke to a group of equity investors. Now it's so interesting because equity investors, they invest in stocks and shares, a lot more fast moving. Now why is Dan going up there and talking about property? And how do I make it relevant? So as I look at them, one of the questions that came to my mind, and as my opening, I told them, hey guys, I'm a property guy. So you're going to tell me, if today you say tomorrow you're going to sink $50,000 into a stock portfolio, just buying maybe 2 counters, the question I want to ask you is, what will you be doing today? And so I had hands going up telling me that they should look at the P&L, look at the industry, look at the past performances, look at the balance sheets, look at the net asset value, and blah blah blah, and a lot of stuff. I think all the stock guys know their stuff pretty well, right? So I look at them and say, okay, that's great, so you'll be doing a lot of research. Now here's the thing, if tomorrow you're going to buy an apartment, can I know what will you be doing today? And a lot of them kept quiet, and I said, am I wrong to say that chances are you won't be really doing much? You won't be doing much. And what you do is that you turn up tomorrow at the exhibition and you ask the agents, and the agent will reply you all the answers that you ever have, and you take it as, wow, that's the gospel truth. But we know it's not. But here's the thing, $50,000 stock portfolio, and you spend that heaps of time, that amount of time to actually research. But when you are talking about a $500,000 home, you buy off the promises and sometimes grossly misrepresented facts. Grossly misrepresented information, not facts. That's come out of somebody who doesn't have the research information and not necessarily have the necessary qualification to understand finances, FX, the risks, and so on and so forth. So we recognize that one of the reasons why RunningStream was formed is because of this gap. And that's just so funny that when real estate is one of the biggest assets that one can ever own, and whether in as a house or as an investment, and particularly as an investment, so little attention has been paid to it, and so little credit has been given to it, and to say that there's a need for professional and sensible advice that is not based on some fantasy and promises in order to sell, that's not based on glossy brochures or concierge amenities, but based on real fundamentals: wages, demographics, culture of the people, the type of people, the transportation infrastructure, looking at the why is the next price gain, how would it gain, why would it gain, and even basic principles like and many different basic principles that go along with property investing. And that's why we as a company started building a company to facilitate that. And I trust that some of you who will be watching this video, if they are not on already, would know that we are that sort. We come down, we share a lot about technicals, and we don't sell to you. We provide you the information, we provide you the advisory, and you decide for yourself whether it's an investment worth your time. Many a times we see people going after investment in the wrong way, and maybe I'll just since I do have time, I do want to just share a couple of pointers here. Many a times what we see is people investing the wrong way. For example, a lot of people go after yields. A lot of people don't question growth. Now here's the thing, and one of the things I always ask people, like yesterday, 2 nights ago, we had a session about Birmingham, and we told them that the yield is about 6%, and straight away, somebody asked, hey, 6% is not that great. I always like to remind people that in all the successful investors, property investors particularly, that I've seen, I've never seen one got rich because they collected rent, right? It's always through capital growth, and capital growth is the main story of property investing, right? And you might think that, oh yeah, is that so? Because when you go to exhibitions, right, they always put up guarantee returns, guarantee yields as the attractive points. Why? Because it sells to your heart. It sells to your heart because, wow, it sounds so attractive because every year I'm going to get income. That's absolutely useless. You're not going to make a significant amount from it if there's no capital growth. So a lot of people, as they go to exhibitions, they will ask, do you have guaranteed yields? Wrong questions. They should be asking, do you have guaranteed growth? The answer is no. There will never be such thing as guaranteed growth, but there is a calculated possibility of a higher chance of capital growth. And those are the things that you want to research on, not whether there's a guaranteed yield and assume that, oh, just because of the guaranteed yield, you are set up for life on that property. It doesn't work that way, right? That's one of the things that we advise clients on, because, and we try to tell them guaranteed yields are not a great thing, because the guarantors run away. The guarantors fail on their obligations. The only one guarantor that I trust in the market, okay, I always tell my guys the same thing, especially when they're doing products. The only guarantor I want is a guarantee from the market. You tell me that the yield is 6%. Don't tell me that you're giving me. Tell me that the market is giving me 6%. Then I'll be interested. Yeah, because that's guaranteed by the market. In other words, it's not guaranteed by one person, it's guaranteed by a whole bunch of people that is willing to pay that price, pay that for that return. Why? Because they have the wages to support it, they have the work jobs to support it. And that makes sense, right? You think about it, that makes sense. When the developers supports you, what they're doing is that, more often times they're charging you extra and paying you back. Right? I always tell people, if you're looking for that kind of product, simple, take 100,000, put in the POSB and pay yourself just to feel good. It's the same thing, right? And you have control over the full amount. Why put it out in an asset, right? If your asset is not going to give you growth and just yield, right? You're going to buy full cash and you're going to put it there. You must have put it in a POSB and pay yourself. Just do a monthly payment out to you, just on the feel good factor. It doesn't make sense at all, right? Another important factor, in the interest of time, since we don't have questions, for example, all right, a lot of people that I work with, we often use that concept that a lot of people, sometimes the old people invest like young and the young people invest like old. Okay, let me quickly explain that, and that will be my last point for this session, and hopefully that helps you to think it through a little bit more. Okay, when you say young people invest like old, okay, let me, maybe before I go into the scenario, okay, young people, generally, you have the income, you have the work ability, okay, and you have the ability to work and years ahead of you to work, okay, but you are strong on your age, you're strong on time, okay, you're weak on capital, okay, so those are your strengths and your weaknesses. You're weak on capital, but what you need is to grow capital, okay. Old people are weak on time, or sometimes we call it the ability to recover, right? In other words, they can't afford to lose money. If they lose money, they find it very hard to earn it back because they are at the end of their work life. Now, they are strong on capital, as in like over the years, they must have accumulated some money. They're strong on capital, but they are weak on time and their ability to recover. Young people, they can recover very fast, even if they lose in the investment. Doesn't mean that you should go out and try losing an investment, but if it happens, you can recover very fast. You have the advantage of time, but you have less capital to play with. Now, more often than not, what we see is that because it is very counter human nature to a certain extent. See, the young people sit down and say, hey, I have so little money, I don't dare to risk it. I don't want to lose it. So I buy products that, oh, give me the yield, and then wow, very safe and all that. You know, it's guaranteed 6% and all that. And start to realize that, you know, after 10 years of investing in a product, they find that yeah, it gives you 6% in the first 2 years, then it drops to market rate of 4% because guarantee yields. And after that, you know, there's no growth, and your capital never grew, and you never grew in your strength. You just grew in your weakness. Do you need income? Not really. Will the extra $2,000 a year makes a whole lot of difference to your life? You know, for most young people, not really, right? In fact, young people should be taking a little bit more risk. Okay, so a lot of times when the younger ones come to our you know, office or consultation, we say, take a little, buy something a little further out, you know, lower value because since you don't have the capital, but has a great upside. And we do the research to help them be able to overcome that. Now, young people should buy that now. Okay, so that, you know, if it doubles because of a lot of infrastructure development, great, they're going to make money from it, and their capacity then expands. Then they are able to expand their portfolio. Okay, don't invest like old people, so safe, you're afraid, and in the end, you know, you get nothing back, at least not a lot, right? When does old people act like young people? We have seen that as well. More often times, people who, you know, are concerned about their retirement. So we have seen people whereby, you know, for example, we've seen guys from the army, they collect their gratuity, and to their horror, they realize that, you know, the gratuity of 300, 400,000 is not going to last them very long in today's, you know, cost of living. And they panic. And what they do, they say it's not enough, so I have to generate more. So that sense of desperation drives them to investment schemes like gold, silver, guaranteed 3% a month return, and so on and so forth. And in the end, they end up losing all they have, losing their entire you know, gratuity and things like that. Now, I'm not saying this just out of theoretical background. If you sit in our office, you see all kinds. People come in with very sad stories. I've ever had to tell a guy that says that, and I ever have to tell one of the old army guy that there's practically nothing else that can be done because of your age in terms of finance, you know, and you know, some may say, oh, even your little money left can play stocks. Not at 65 years old. And his only retirement plans will have to be his kids, right? And that's pretty much it. It's very difficult to go forward when you have lost about 400,000 of your gratuity to gold schemes. I'm sure gold schemes, you will be able to think of a few names. Yeah. So those are the realities. And to all young people out there, if you're watching this, and to many people out there, one of my passion, and sometimes you see me screaming it over Facebook as well, guys, learn, get informed, get educated, get to know. You know what? When we conduct events, we are happy to have you here. Even if they tell us that, you know, I'm not ready to invest, and my intent is not to invest yet, perfectly okay. You know, just turn up, learn, figure things out, because it matters. If you are guarding your company, your corporate job's margin to your partners like a hawk, and you're watching over it and says, wow, we shouldn't give that 1-2%, and you work really hard in your job, may I then invite you really work a little harder? I mean, you know, if you can commit just 10-20% of the effort to your financial well-being, I think that will go a long way for most of us. And on that note, I think I will end this session. It's not really about overseas properties, but I think it's a great start. And I hope as you watch this, you know, you will think about coming over and having a chat with us. I mean, we'll buy the coffee. And let me assure you that in this company, there is no hard sell. There's no even sales. We don't sell. We simply are there for you, and that's it. And if you find that we help, great. If you find that we don't and we're not relevant, that's great too. And we would appreciate you for just turning up. All right. So I hope that helps, and I look forward to the next Friday, and we will probably market it a little bit more so that you guys will know about it a little bit earlier. Right, thank you for taking this time. Time for my lunch. Bye.